will there be any Brexit? And most important of all, what are the trade opportunities because of this upcoming referendum? The very first thing for me, why I really am following it, is because I live in Europe and most of my saving has been in euro. However, will I be trading euro? My answer will be no way. So I'm not really going to be trading euro dollar. The next question you probably are going to be asking, will UK remain as a part of the EU? My answer is probably yes. And the probability is close to 80% from my side, based on my personal communication with high net worth individuals, with some of the politicians that I've just discussed as well. So they are commenting that the vote from their perspective is just there as an extra bargaining power from the UK towards the EU, that they want to negotiate on UK's involvement, mostly with regard to their contribution towards the EU budget. So that's understandable. But we are not politicians, and to be honest, I don't really mind whether UK stays as a part of EU or leaves. What I mind is how can I make the best out of this event that's ahead of us. And I guess this is what you're going to be looking for as well. You have to remember the 15th of January 2015. You remember what happened then? Back then, the SNB, Swiss National Bank, had a peg of euro to Swiss franc, and that peg was basically at 1.20, which meant that euro Swiss franc level couldn't have broken below 1.20, and each time the euro would go under pressure, the Swiss National Bank would sell Swiss franc in order to bring the level back to 1.20 level. And they kept on doing it for so many months. You can see the valuation ranged between 1.20 to 1.26 level, and it was just there. I myself took so much of profit opportunities there, because each time the pair was touching 119.80 level or so, I was just buying it, and I was holding on to it. Even with a positive swap rate as well on it, I had the best trade opportunities out there for myself. But then the big day came, and this is what happened. You can see what happened over here. Within just minutes, euro Swiss franc collapsed. Many brokers went bankrupt, and even that many traders saw their accounts being evaporated. And it was mostly because of the lack of liquidity. Now, similar thing I'm expecting in this Thursday. But the question is, it is not the SNB making a decision. It is the UK making a decision. Why Yagub is not trading the British pound, but he's looking into Swiss franc. What is the catch? And that the catch is the most important part here. So far, I have been looking into last 4 months of operations from the SNB. I've looked into their books. I've looked into their balances, and I can only see one thing: the Swiss National Bank has been selling CHF. Just they used to do it before the January 15, 2015. They keep on increasing their sales activities ever since the Brexit has hit the market as well. And May, June has been quite a difficult month for them. So what does it tell us? Why is it happening? The very first thing is that the Swiss franc itself is one of those very unique tradable instruments that is politics free relatively. They didn't even participate in none of the world wars, just to give you an idea. And they haven't really been hit significantly by none of the economic recessions that we have seen so far, compared to, let's say, their neighboring countries like Italy or so. They didn't even feel anything. So Swiss franc, therefore, is a safe haven asset in times of any fearful period or instability, people would tend to purchase Swiss franc as it is a safe haven asset. And this is exactly what's happening right now. I have been following different news that the investors have been selling their assets in the UK. They've been selling their stocks. They have been selling their GBP assets and transacting into Swiss francs, etc. And what does it tell you? It means that there has been a big demand for it, and therefore the Euro CHF has been under pressure because they are also selling the euro assets as well. And the answer is also there quite significantly clear for one main reason. Euro has been under pressure. European economy is not doing very well neither. And SNB has just that much of limit. They are not able to catch up with the whole European economy. If all the investors were to turn their faces towards the Swiss franc, the SNB wouldn't be able to catch up with that much of Swiss franc sales. So that's indeed what I'm expecting. In short, let's get back to the market and see what we can really expect out of it. If we look into the market, the following is my view. I'm convinced that the market has a breakout or breakdown level at the level of 1.10. You can see, especially from last week's candle, the weekly candle, this is a potential reversal candle. So if we see a break above the 1.0905 level, which is basically the highest high of today, we are going to be looking for further bullish development. And that further bullish development, I'm convinced that is going to be at the level of 1.0950 level to 1.1050 level, so within this period. But from there onwards, we will be seeing reversal, and it will be inevitable, especially by the time that we are moving towards the Brexit voting. And I'm convinced that this is the most important level over here. This is basically the 50 moving average, and this was the 200 moving average. But if we change it to 120 moving average, you can see that there is an equilibrium level over here, and that's at 1.0971 level. And you go backwards, you see that there has been massive support level before, and you go backwards further, and you can see that it used to be a resistance level, it used to be a support level. So this is the level that we are looking into. So we will be looking on Thursday the pair to test 1.0950 to 1.1050 level, and we will then be shorting Euro Swiss franc. The next thing that I'm going to be looking into is going to be gold, and it is one of my favorite instruments to look into in times of recession or in times of fear. And what better fear than the Brexit? So if we look into the Fibonacci wave as well, what can we see? We see that the pair rose and touched the 200 moving average over here. It's 200 week moving average. And if you go on daily time frame as well, you can see it a little clearly. The breakout that we had initially talked a couple of weeks ago, that was at 1245 level, 1245 level, took place as the gold broke above the 50-day moving average. Now, if you make it 20 moving average and 100 moving average, as I keep on talking about most of the time, you can see that there is also an equilibrium level close to 1245 level once again. So it is also coinciding with our 38.2% Fibonacci retracement zone. But may my Fibonacci fail at 38.2%, meaning that if we see that the gold would not be hitting the 1245 level, we potentially could see that the gold would be reversing from 1268 level as well. And why am I really talking about it? So instability in Europe would mean an impact on global economy itself. Like what happened during the 2008 recession. You saw the world economy going into recession, and immediately the world went into bullish gold views. So I'm not really commenting that Europe will enter to another recession, which I'm not saying it's not possible neither. However, Europe is being shaken right now, and gold must be appreciating. Now I'm going to be giving you another opportunity, which is not really Forex related. What you can do, especially if you are living in Canada, I see that many of you are living in Canada, there are some penny stock gold mining companies. And in times of recession like we are going to be heading, I'm pretty convinced now, they tend to appreciate by 4,000 to 6,000% within a year. I'm talking of penny stocks. And I imagine if gold was to appreciate by 15% within the next 6 to 7 months period, those penny stocks were or are going to be appreciating by 4,000 to 6,000% because they are tiny companies and their stocks generally appreciate much rapidly. So if you know if you are a Canadian or American and you know your local industry well or your local neighborhood well, and you can catch local gold producing companies out there, go visit them and try to. You can also consider investing in their operations as well. And just imagine if you are to put $10,000 and then there is a 4,000% increase, it means your account basically increases by 40 times. Your 10,000 becomes 400,000, and that's just a great opportunity. So back to Forex part, what we can do. We will be looking into 1268 level as an initial testing level, and we will not be placing a pending buy limit order at this level, but then we will also be looking at 1263 level. So 1263 level, I will have a 100 points of stop loss, sorry, 162 level as a pending buy limit order, and I'll have 100 points of stop loss, and my take profit is going to be remaining at 1327 level. So we would be basically looking for around 650 points of take profit and risking around 100 points in total. Although I'm not really a risk reward following person, but this is quite a juicy entry that we cannot really ignore. The next point that we are going to be looking for trading Brexit is cable. What are we going to be doing for cable? And what other trade opportunities are out there? I'm not going to be talking much about cable, but on daily time frame, I'm going to show you a couple of levels, and I guess it will be enough for you. You can see the pair rising towards 200-day moving average and finding itself a resistance on it today. And it was at the level of 147.07 level. It also falls onto 38.2% Fibonacci retracement zone. So it's an extremely important level for us to take a look at it. However, though, the main resistance we have is right on 148.25 level, just a couple of pips above the 23.6% Fibonacci retracement zone. And if you look more carefully towards that level, we can see that it is the previous highest high as well. Well, very close to it. We had the previous highest high at 147.70 level, and that has been so far a massive resistance level. Meanwhile, the previous massive or most important support zone was at 148.05 level. So nonetheless, we will be looking for 1.48 level as a potential sell limit order, and we will be initially going pretty insane, pretty crazy about this pair, and we'll be looking initially towards 145 level as our immediate target. And that's going to be around 300 pips of take profit. And if you're wondering what about the stop loss? We can define the stop loss by Fibonacci as well, but just go on your Fibonacci, add 0.10% there, or just 10%, and it's going to be giving us the trade opportunity out there for your stop loss. And stop loss is basically just above the 148.70 level, given the fact that 10% Fibonacci retracement zone was at 148.66 level. So this is going to be for cable. There is one pair that I haven't analyzed yet, but I would like to do it together, and it is the GBP CHF. So if you look at it closely, firstly, of course, on weekly time frame. So what do we really see when we look into GBP Japanese yen? We can see that the market has been significantly on bearish side for the last couple of months or even year. If you look into the 2015 as well, and each time the pair has risen enough towards the 20-week moving average, it has bounced off, and each time it has gone way too below it. In another word, each time it has gone more than 10 Japanese yen difference from the moving average, it has started again to bounce back. So what am I really gonna be looking into as of this moment? If you are to draw a Fibonacci for the last 3 weeks candle, from lowest low of last week's to the highest high of the 29th of May, you will see that the market is creating a Fibonacci wave. And if we combine it, you will see that your next support is lying at 50% Fibonacci retracement zone, and that is falling onto 154.55 level. And it seems like it is going to be immediately a good level for us to trade or take advantage of the market movement. If you are able to place a pending sell limit order at that level, which you can, 1.55 level, you would be looking into a good profit opportunity of around 120, 130 pips. Meanwhile, your stop loss should be just around 80 pips to 90 pips. However, though, if you want to stay on more secure side, my recommendation or my personal trade entry would be at 155.25 level, and my stop loss would be at 156.50 level. Meanwhile, my take profit should be going towards 152.40 level, and most important level for me would remain at 149.90 level, just a little bit above the Friday closing point of the market. And I'm expecting some of your questions right now, but the main reason why I would be aiming to such entry is because of the fact that we have a major support resistance level, previous support which turned into resistance level, and it is also 20 moving average at that level, and it's just below between the 38.2% and 50% moving Fibonacci retracement zones. So that's the main reason why I should be looking for that level to enter a position.